everyone and welcome to CT Connect. I'm joined today by Claire McArthur from Share NZ, a specialist mortgage advisor. We're just chatting about what the lending environment looks like at the moment and how to be smart about your decisions around mortgages. So Claire, before we start, for someone who hasn't used a mortgage broker before, can you just help us understand what the benefit is of coming to you direct rather than going to the bank?
Yeah, sure. First of all, thanks for having me, Kirsty. Great to be here with you. So a lot of clients wonder what the difference is between going to the bank or coming to a mortgage advisor. And the first thing we say to them is, first of all, we work for you. So instead of the bank just offering their one single product that they've perhaps got in-house for a home loan, we work for you and we go, right, which bank is actually going to be best fit for you? Second of all, the other reason to come to us is that we're going to save you a heap of time and also provide some personal advice. So instead of you walking up and down the main street trying to book appointments with all the main banks, you're going to see us once or twice and we will navigate and figure out which is the best bank for you.
Okay, good to know. And then secondly, the big question that I think everybody's talking about at the moment, if somebody is looking at renegotiating their mortgage or looking at taking on debt in the next 3 to 6 months, what things should they be thinking about or aware about to help them start having these conversations with you?
Yeah, so first of all, I don't have a crystal ball, but I'll do my best anyway. So normally when people have got a loan coming up for review, they're going to get reminders on their app from their bank saying, here's your rates, pick one, you know, and that'll sort of roll over on whatever the date might be. But what we're saying to clients is even if you didn't initiate your original loan through an advisor, you really should speak to one, particularly with the environment that we're in at the moment. Because before you lock in that rate, you want to figure out what other things might be going on in your life. So you might want to refinance, you might need to restructure because perhaps there's been a change to the household, someone's had a baby or changed jobs. And we want to make sure that before you lock in the rate, we can review your whole lending situation and what's happening in your world.
Yeah, that's really great advice, Claire. And I guess from our perspective as well, we also like to see somebody have those discussions with an advisor too, to make sure that we're looking at not only the personal debt, but also taking into consideration the business side of the debt as well. So look, thanks for coming along today, Claire, and for sharing your insights with us. If this has triggered a thought process with you, or you'd like to discuss your personal situation further, please just flip me a message and I'd be happy to introduce you to Claire. That's Claire from Share NZ. We're here to help.